Hey everyone, welcome back to Anyreach Roundtable. I'm your host, Richard Lin of Anyreach, and we're here today with Paul, the CEO of Opstart, a full-stack financial ops platform that incorporates human-in-the-loop across bookkeeping, taxes, CFO needs, billing, payroll, and back office. Today's theme is startup finance in the age of AI and why founders shouldn't be doing their own books. Welcome to the show, Paul.
Thanks for having me, Richard. Great to be here.
Absolutely. So you've had a pretty diverse journey in venture capital, investment banking, even co-founding a nonprofit. Can you share with your audience, some details about your background, your experience, and then ultimately what led you to focus on startup finance and start the idea of Upstart?
Sure. So I always fancied myself an entrepreneur and wanted to start a business someday, but like many people, I thought that would come as a moment of inspiration and having the right idea that no one else had thought of at the right time. Out of college, I had studied finance. I went into investment banking like many of my classmates. From there, moved to venture capital because I thought it would bring me closer to, being a founder and understanding what the startup world was all about. And I had my opportunity to actually get into starting a business and being a founder for the first time, as you mentioned, in the nonprofit world, where I spent a few years in the Dominican Republic building a tech solution for international development organizations to collect better data on remote communities where they wanted to do work. So that organization was called Puente. I co-founded it with my college roommate. We had a blast, and I'm proud to say it's still up and running strong today, with me just as a board member, not needing to do much day to day.
Got it.
But the idea for Opstart really came from a combination of my direct experience with Puente and then things I observed as a VC with Adam Street Partners in Chicago. So with Puente, I foolishly thought that I could do all of our finance-related work myself. Being a co-founder from that background and running on a really slim nonprofit budget, I figured I could do everything from our bookkeeping, invoicing, taxes, FP&A, you name it. And I found that the job was a lot harder and more boring, candidly, than I expected it to be. The things that I enjoyed were, using the financials to make strategic plans and decisions, and that was impossible if I didn't have clean financials to analyze. So I spent way too much of my time categorizing transactions, pulling reports from different systems and stitching them together in a centralized hub, Googling around, because this was pre-ChatGPT, to figure out whether we could pay employees as contractors, how to move money from the US into other countries without paying too many fees or incurring compliance challenges, figuring out just what taxes we need to file, nevertheless how to do them. It was a mess, and I made a ton of mistakes, including almost getting our nonprofit status revoked at one point because I wasn't aware that we had to file a tax return for a year when we had been incorporated for about a month but hadn't conducted any financial activity. So that's an important lesson that I now share with people from personal experience. But coming off of that, I thought back to my time as a VC, and I had always been incredibly frustrated and perplexed by how messy the financial data was that founders would share with me as an investor. Coming from investment banking before that, I was used to really clean financial data and spreadsheets, and it certainly wasn't the case with startups. So I realized, having done the job myself, why that is, and that it wasn't due to a lack of financial literacy or underappreciation for why these things matter. It was really just a function of so much work being involved and no great solution in place to do it. And so we built Opstart to be that all-in-one finance function as a service for startups, allowing founders to just take that off their plates entirely, get it all done right by someone they trust, and focus on the things that matter most for their business.
Gotcha. Well, thanks for sharing your background. And if the audience doesn't know, actually, Paul and I go way back. Actually, my first company, Ombre, and we actually had Opstart as our key fintech operations vendor. And this is, as Paul mentioned, pre-LLM days, and we're already seeing a ton of benefits, being able to hand off a lot of that financial work over to Paul and his team. And so, as you think about founders, being busy building product, closing deals, when it comes to financial ops, that's one area that obviously you can't ignore as a business, but most founders do. How do you and your team make this process more seamless? And are you starting to look at any sort of AI solutions baked into your product to make that process better?
Yeah, there is a quote I really love from Jack Altman, who is the founder of Lattice. And he said, when you're not fundraising, a founder's job is to avoid all distractions except your only three jobs, which are talking to customers, building product, and building your team. Um, and as you said, right, the whole finance stack is kind of in this weird area where it's clearly not one of those three jobs, and you shouldn't be distracted by it, but you also can't ignore it.
Right.
You can't just not do your taxes, right? Um, and so our goal, like I said, we want to allow founders to get the stuff off their plate entirely while still trusting that it's going to get done correctly. The way we do that is essentially by arming you with one trusted person who's your advisor on everything finance related, customizes a tech stack and process workflow that's going to suit your business well because businesses have different needs and the same off the shelf solution is not going to work for all of them. And then we put together the right tech stack, the right processes, and the right people to make sure that all of the things you need to get done to maintain a clean finance function are going to be efficient, scalable, and on time, right? So we're going to be making sure your bills get paid when they're due, your customers get invoiced at the right times for the right amounts, and they're actually encouraged to pay those invoices. Your books are being reconciled at the end of every month correctly and fed through a report that actually gives you the right managerial insights for your business. And of course, throughout the year, various tax deadlines come up. We're going to make sure you meet those. So it's a combination of human oversight. You've got one finance person sitting in your Slack who answers all your questions and sends you what you need to know. That person's backed by a team of experts on our end who can give them, give them input on areas that might be more in one person's subject matter expertise than in others. And then through it all, right, we have the experience of working with hundreds of venture-backed startups, seeing which systems are going to scale, seeing which processes hold up, knowing what VCs look for in diligence, and we leverage that to make sure you've got the best-in-class tech and automation suite to power this stuff so it's not costing you too much money.
Got it. Got it. You mentioned a really interesting thing around kind of founders and financial operations, especially because there's expectations and dependencies. Obviously with VCs getting reporting correctly, the board, even have the government paying taxes. So there's a lot of different players in terms of a founder's rigor on their financial operations. How do you see those other players actually playing in part to what you guys are doing, and then how is AI impacting those other parties?
Sure. So yeah, there are competing stakeholders that all want to see different things from your, financials. I'll just say more broadly. I think that those competing priorities do come into question sometimes for even simple things people don't appreciate. The small decisions you make with your bookkeeping will impact the metrics that your board sees, right? Whether you categorize something as a sales and marketing tool or just a G&A software subscription, that will impact your CAC, right? Whether you decide to split payroll by department will impact, again, your sales and marketing expenses and ultimately your CAC. From a tax and compliance standpoint, there are more hard rules around this, and it prevents you. They serve as guardrails to prevent you from doing anything that would unfairly fudge those metrics and paint too rosy of a picture, right? But I think it's important for the people that do your in the weeds operational work to understand how what they do impacts what those stakeholders see at the end. So there might be book to tax differences to factor in when it comes to knowing whether to capitalize your engineering team's expenses for tax purposes. Will that make you profitable or not? Will that underinflate the burn that your board sees and give them an incorrect picture of when you need to raise your next round, right? That all definitely comes into play. And in terms of the way AI impacts what those stakeholders see, I would imagine that we're close to a world, I mean, depending on government adoption, which you never know on the timeline, we're
Yeah.
close to a world where it's going to be a lot harder to skate under the radar for a while if you are sort of trying to put off certain compliance things until later, right?
Right. Right.
There have been plenty of startups over the years that sort of think they're doing fine because they haven't gotten an IRS notice, and then people like me hop on the phone and need to try to kind of sound like naysayers and convince them that no, it's not that you're in the clear, it's that you just haven't been noticed yet. I think it will be much harder to go unnoticed for a while in the future thanks to AI.
Right.
It will be much harder to pass an audit even at early stages if you're not doing your books correctly. But conversely, right, you can also leverage AI to get the right infrastructure in place, know when your taxes are due and how to do them correctly, get your books done quickly, all of that, so that when the time comes down the road, you're not, you know, raising any red flags.
Got it. Got it. Yeah, no, I think you bring up a really interesting point across these different parties and potentially the paradigm shift of how AI is going to impact. A full audit is going to be more scrutinized now because AI can actually, funnel through all this information. And I was just speaking with a founder of an e-commerce business where we were talking about, Shopify's checkout and conversion rates being the best in class and so on and so forth. But, you know, would any of that even matter, in the next couple years when shopping is done completely differently now, right, with agentic AI? So, for instance, if AI knows all your preferences, all your previous purchasing behavior, would you still go to Google, search up a product or Amazon, add it to cart, check out, put in your credit card, or would you just tell AI, hey, my preferences, I need a new shirt for a new vacation I'm going on next week, go figure it out and then get it shipped to me, right? And so that entire way of kind of doing operations, and more specifically around shopping, is completely different, right? And the businesses that, the Shopify's of the world and so forth, are they still going to have the same kind of products, services, and whatnot? So along that kind of vein, when you think about where operations are today, obviously you mentioned like some hard and fast rules with the IRS, taxes. If these other parties start adopting agentic AI to help with operations, how do you see, the current expectations and the current needs pretty much shifting? And I know it's kind of a broad question. What does it look like in the future? Do you have a magic ball? But any thoughts about how that could potentially change and how that would change your product and the quote unquote full stack fintech operations that you have today?
Yeah. Certainly a loaded question. We can dig into a number of different implications from it. Um, but, you know, what I come back to with the world we live in, right, which is really the weeds of your financial data. Um, I think if you're not in that world, you might underappreciate how much of a siloed data problem there is, and how much of a black box things can be. And then, and once you understand really those two things, plus the degree to which there is still kind of thoughtfulness and strategy required to do it, it's not all just totally rules based. Then it paints a slightly different picture of kind of where things are going. So look at, one use case that might be applicable for a lot of the audience here would be investor reporting, right? The traditional way to do investor reporting is a founder like you asks a, fractional CFO or accountant like me to send them the financials. You grab them from me, you take them into a separate spreadsheet, run some updated analysis and calculations, put them back into a new report format, send them out to all your investors at various cadences depending on what they request, right? The modern way for investor reporting, I mean, you see that the top VC firms increasingly switching to tools like Visible or Standard Metrics that actually just connect to your QuickBooks. So instead of asking you to feed them your revenue, your burn, so on and so forth at the end of every month, they already grab the data directly from your general ledger. The problem that we hear all the time from VCs and from founders for that matter is those systems have no idea whether your books are actually reconciled, right? And if they are reconciled, are they being done correctly Are they being looked at by a third party, or is a founder, at risk of maybe some bad behavior here that they're not catching?
Right.
Um, that is, a high level example of where I think the AI doesn't quite get to the outcome that you're looking for. And then even within the more nitty gritty workflows of it, right? People, I think, oftentimes think of AI powered bookkeeping as a really obvious example. Like all your transactions are in one place, and AI knows what this vendor does and what you've paid them to do previously. So it suggests the right categorization, and your books are good to go, right? The reality of it is, this as a founder, your actual financial data comes from Shopify, from Brex, from Gusto or Rippling, from Ramp, from checks that some vendor made you write because they're an old school person that
Right.
installed carpet in your office, from all these different sources that are all not really well connected together. So you have to have an AI layer that is able to get into all those siloed endpoints in order to get the full picture right, which is really, really difficult given that there are so many different systems available for all those functions. And throughout the course of a company's existence, you are adding and removing systems with some regularity, right? So what we look at for our business really is more along the lines of what are the endpoint use cases where AI can take something that's fairly competitive or repetitive and manual and connect systems, extract data, apply knowledge in order to make it much more automated and streamlined. And I'm happy to give you some specific examples there if it would be helpful.
Yeah, no, that'd be actually great. And actually, to
Sure.
that point, I mean, we're seeing this, big trend. There's all the foundational models saying like AGI is just right around the corner, but the truth of the reality is, it's still quite a hybrid approach. You might have some AI automation, but you still need that human oversight, right? And so as you kind of talk about these different specifics and finance being such a critical and sensitive, operations, how do you see those specifics, and then in turn, how does humans kind of jump into some of those use cases as you mentioned?
Yeah. There was an interesting LinkedIn post that I'm thinking of. It's from a friend of mine, Ivan Makarov, who is portfolio finance partner at Andreessen Horowitz. So he kind of works with all their early stage companies to make sure they have the right finance function running. And he highlighted that basically AI adoption's been slower than people would anticipate in finance, and asked for some reasons why. And really, the most common things he heard were number one, the black box problem of finance professionals. They need to make sure that the work is right. They can't just get an answer, they need to audit how you got to that answer. And AI is not very good at showing its work yet. It's just good at kind of providing you with an answer, right?
Right.
Any sort of hallucination or misapplication, misinterpretation of information would be disastrous in the finance world.
Right.
And then secondly is the one I mentioned earlier, right, which is siloed data. I mean, once you put all the information into one centralized system, analyzing it to extract the right insights is not the hardest part of the job.
Right.
And AI is not that helpful in that regard. And so, those are, I think, two things that tend to slow the process a bit. But if we work backwards, you have more AI expertise than me, but I look at some of the things that AI does really well and how those apply to certain areas of our business. So like OCR and data extraction, right? The world where you needed to actually look at a copy of a receipt to grab information on it or review a contract to figure out what it means for invoicing, grab someone's W-9 and manually enter that information elsewhere. That should be dead, right? Workflow automation, right? Connecting various systems and applying logic to reduce the number of steps required to complete tasks. That's getting much easier. Research is an obvious one, right? The number of hours your accountants used to have to spend poring over different articles and books that their firm has in order to understand your options for a certain tax, question. That's been dramatically reduced. And then summarization, right? Just taking all that data and putting it together in a very clean way so, lay people can understand it. Again, much easier now. Look at how those kind of functions apply to something like invoicing for B2B companies. The old way that worked right, was you had a salesperson sign a contract, upload it to the CRM. Someone from the finance side had to know that the contract was signed, go download it, right? Figure out what invoices had to be created off of it, which could be 12 monthly ones if it's a, monthly SaaS deal that lasts 12 months, could be one upfront implementation fee plus quarterly ongoing SaaS fees. It does it auto renew or not? There's a lot of different action items there. Once the invoices are created, you then have to go create a deferred revenue schedule off of that to figure out how much revenue to actually recognize in your books relative to the amount that you're trying to collect. Um, and then at the end of it, right, there are these spreadsheets that you guys as founders need to track your ARR, your churn, your net revenue retention, things like that. All of that feeds from the same data that's just in these contracts. So look at tools out there like Tabs and LedgerUp, right? They've taken all of that and turned it into one process. Now, when a contract is signed, the CRM sends it to that system. They use OCR to extract the key terms of that contract. They automatically create the invoices and set them up in your invoicing system based off of that OCR, right? They research the terms of that contract against accounting rules like ASC 606 to generate the deferred revenue entries and automatically plug those into your accounting system. And then in the end, they summarize all of those outputs so you know with pretty verifiable certainty what your actual net revenue retention is, right? So that I think is like a great example of where AI fits in super well in the finance stack, but it's an endpoint use case. It's not an overarching, automated taxes or something like that.
Right.
It's a very niche use case that works super, super well.
No, I think that you bring up some great points. One of the things we're exploring here at Anyreach, when we talk about like billing and invoices and collections, like that's, one of the challenges we have as a B2B company. It's like, hey, when are you guys going to pay your bills, right? And, obviously you can have kind of like triggers and notifications via email. That's like, hey, after 7 days of, the due date, if they haven't responded, send another email. But we're actually creating a voice agent that's able to tap into your invoicing data to be able to, well, not even just voice, an omni-channel agent, I should say, whether it's email or texting the individual or even calling them, say, just checking in, right? Like your payment's due, where are you at? Be happy to help you get that through. I'll shoot you a text message, click the link, put in your credit card. So that's one of the areas that we're looking in terms of the finance stack, if you will. Like, can we bring more multimodality agentic AI to actually help do a lot of that, additional work to, improve your kind of financial health. So pretty interesting that you mentioned that. And when you think about finance in particular as an industry, super sensitive, and we're seeing this in like healthcare, for instance. Healthcare data is super sensitive, legal, and it's great to hear, obviously the human in the loop strategy that you have, because we think, the trend here is that those industries are still going to have humans actually probably pretty much forever, because when it comes to sensitive information like a diagnosis for healthcare or, your financial reporting to, legal liability, you don't want to fully trust AI to say that's the final shot, go submit it, right? And so I think there's always going to be that human in the loop, and it's great that you guys, obviously are looking into that. So
Yeah, thanks. And I think, along those lines, it's not about necessarily distrusting the accuracy of AI because, humans make errors more often than AI is what everybody will tell you, right?
yeah.
I think there's just still some layer of creativity that is required to ultimately help you make the right decision in the end, right? So going back to the example you just gave on collections, right? AI can help you make sure the invoices go out on time for the right amounts. You're sending reminders at some regularity. You're calling when the email doesn't work, right? All of that is great. At the end of the day, a human might also just look at it and tell you, have you thought about changing your contract so you start to collect interest if people don't pay on time, right? Or have you tried just collecting upfront instead of overtime to reduce the number of invoices? Something like that. From a legal standpoint, it's similar. Like you want your lawyers to spend all of their time actually helping you think through the strategic implications of some
Right.
legal decision rather than drafting documents.
Yeah.
And I think for, my opinion, and I think most founders would probably agree, is it's not that you want less accounting and legal advice. You actually want more of it
Right.
if it can be affordable. So if accountants and lawyers and folks like that can deliver their service cheaper and spend more of their time helping you understand the strategic implications and delivering real value, then that's a win-win for everybody. That's the stuff that we all like to do on the service provider side.
Right.
And I would love to be able to spend more time doing it, but you need to have the blocking and tackling done correctly in order to get to that level.
Yeah, and that's a really good point. I mean, I see it as 80/20 across, whether it's finance or legal, where, pre-LLMs, 80% of it is like the busy work, and you're getting these massive invoices and bills, and you're like, what the hell, dude? Like, the value is in that 20%, right? In terms of a founder being able to make strategic decisions and so forth. And really kind of AI is really kind of flipping the script, right? Because you can automate the 80% of grudge work for the vendors that you're working with, and now you're getting so much more value, right, upfront. So, when you think about Upstart's full stack model, you guys do taxes, payroll, billing, CFO, fractional CFO, offerings. How are you thinking about these different products and services? And are you guys using any sort of like internal AI tooling, any models? How are you guys streamlining these different kind of offerings you have?
Yeah, I mean, look, we don't ever envision ourselves being just a full AI solution, fully automated solution for
Yeah.
the various reasons we've talked about. I think human in the loop is really important in this
Mm,
world. But AI can help us deliver the value that customers are looking for
mm,
faster, more accurately, and at a lower cost. So some examples of like how we use it today. Monthly reporting. You
mm,
know, most like bookkeeping firms deliver your financial statements at the end of the month and
mm,
let you figure out what to do with them. We run them through a customized AI tool that delivers like CFO-caliber reports
mm,
highlighting what's driving variance, what trends to keep an eye on, what actions you might want to consider taking. It takes our team no additional work and it delivers some additional value for clients.
mm,
For research, right? It's an obvious one that I talked about earlier, but we built a custom GPT bot, trained it on verified gap accounting guides, technical accounting knowledge bases, right? And our team uses that internally to get really quick answers to complex questions that we run into for clients. And that's stuff that pre-AI would have required multiple internal meetings for all of us putting our heads together to do our best and still coming up with a worse answer, right?
right.
For client communications, like we want that to be really personalized, but we use an AI powered email hub that allows us to respond more quickly and thoroughly.
Mm,
Our team pretty much just brain dumps into emails and then clicks a button that cleans it up into a nice professional manner. We have AI, recorders on all of our calls. Like most people, they summarize the calls and suggest action items that can be fed through the email to make sure we stay on top of them. Um, One maybe underrated one in our world that I don't know how applicable it is elsewhere, but we can turn our accountants into coders to some extent.
mm,
Every company's financial stack is custom enough that one off-the-shelf tool to like automate reconciliations, it's not going to work that well for us, right? Because people have different endpoint systems, they have different processes and accounts. You need it to be fairly custom. What
mm,
we can do, right, is our accountants go into ChatGPT and say, this is the file I use to reconcile my client's data. Can you write me VBA code that does these 6 steps that I have to do every time I'm starting a new one? And it will just create one Excel macro button, like the oldest form of clunky automations, right?
yeah.
But it works well. So we create those automations that allow us to do our work more quickly, even if it's still in a somewhat traditional manner.
Mm,
Um, and then, I mean, various things we use it for internally, like most companies. We've leveraged AI to automate customer onboarding workflows,
mm,
billing, profitability, capacity tracking. Things like that have been awesome. And I'm excited. There's one that we've been working on for a while. It's not deployed yet, but hopefully soon you will have access to a financial analysis chatbot in your client portal where
mm,
you can, it's already plugged into your portal. It knows all your financial data. You can ask it questions. It can give you deep analysis and trends into your performance. And if you're like creating an investor update or something, you can just tell it, give me a graph with, revenue burn and runway over the last 12 months, put it in this format, and you can clip that graph and paste it into your investor report to save you some real time in Excel, right?
Wow.
So I'm excited about that.
Yeah, no, that's super cool. I think that's gonna obviously add a lot of value to founders to be able to, get those strategic insights at scale. If you're ever looking for a voice experience, right, where your founder's like, hey, I just want to call in, I'm in the road, and I want to ask about XYZ things about my financials, hit me up, let me know.
That's a great call. Absolutely.
Awesome. And so, with your business, obviously, you've worked with a lot of startups that have been backed by some pretty well-known tier one investors like Sequoia, Index, Chicago Ventures. What are you kind of seeing in terms of founders as they get ready for their next fundraise? The due diligence, the data rooms, and so on and so forth. How are you guys using AI for that? And then, yeah, even on the other side for the founders, what are they doing to kind of speed up the process?
Yeah. Um, So I think a big part of the early stage financial diligence that we interact with
Mm,
is essentially investors trying to avoid landmines and ensure you'll be a good steward of capital,
mm,
right? There's not a ton of financial data for a pre-seed or seed company that's going to impact your investment decision most times. It's more along the lines of figuring out whether this operator takes their financials seriously, has checked the right boxes, and is going to be, again, a good steward of this capital. So for one, do you have a good accounting and finance partner in place
mm,
yet is something that people want to talk about. Um, I mentioned earlier Andreessen Horowitz, right? But every A16Z company that signs a term sheet is agreeing that they have to have an approved bookkeeping partner in place
mm.
within, I think it's like 30 or 60 days of receiving investment. And that's not just any, it's not saying my books will be done or I have a bookkeeper. It's an approved one, right? So they value quality in that regard. And we're lucky to be on that approved list. They're going to look at, are you up to date on taxes and compliance? They want to see when your books were last reconciled and whether they're being kept on like a proper GAAP accrual basis or whether it's just cash basis bookkeeping. Investors hate cash basis bookkeeping, FYI. And then they might ask to see like customer contracts, employment agreements, etc.
Mm,
The area where I've seen AI most helpful for investors in diligence.
mm,
Like one of my VC friends was walking me through this recently. They use a tool, and I forget the name of it. I think Palm was the name, but they
mm,
can upload companies' legal documents to that tool and make sure that the basic, like the dates match, the
mm.
signatures match, the key information that needs to be the same across all the contracts is, and identify early on whether there's a legal, landmine that needs to be fixed, right? So that's one example. I don't I don't see it a ton in terms of like the financial analysis side of diligence yet, but I'm sure we'll get there.
Got it, got it. As you kind of think about where AI is going and the evolution of it, obviously things are moving extremely fast. What would you say, maybe in like the next 3 to 5 years, how AI is going to be impacting, financial operations and maybe more specifically around how startups should be handling that?
Yeah. Um, I think what you're going to see is sort of a reflection of what we've discussed earlier, which is you will be able to automate more of the grunt work that is pretty repetitive.
Mm,
Um, And, people talk about this with engineering all the time, right? That co-pilots can help you
right.
write the code, but a 10x engineer is more valuable than ever because they can use these AI tools to get more leverage on their, time and their brain. It's going to be the same in finance, right? So I think working with a high quality person on the finance side is going to be more valuable than ever because they'll know how to plug in the right AI tool stacks to give them the information they need to generate actual actionable value for your company,
Mm,
right? They'll know how to give you advice quicker to say like, hey, you need to go hire a customer success person because we're churning more deals,
right.
or you need to go focus on collections because people aren't paying us. Um, or we need to change pricing because we're below market on our competitors and we're getting bad customers as a result. All of that will still be as valuable tomorrow as it is today, and still requires a human, level of thoughtfulness. But the days of, I think, founders trying to prioritize what's the cheapest rate I can get on an hourly person to categorize my transactions and pay my bills and do all that, I think that's going out the window. Instead, what you'll see is, can I work with a really good 10x fractional CFO controller type person who leverages these AI tools to get my work done really well in a way I can trust and send me the insights that I need to build a better business.
Yeah. I mean, I think you bring up a great point. The 10xers are just going to 100x, right, with this kind of new trend of AI. And I think forgot exactly which celebrity said this in the business world, but AI is not here to replace all jobs. It's just here to replace people that don't use AI, right? So, I mean, that's kind of the unfortunate truth, but that's why it's so much more important, if you're exploring kind of, should I dip my toes in AI? Yeah, you probably should. And this is happening across all industries. So, all right, well, Paul, thanks so much for this incredible conversation. I'm very certain that our audience has learned quite a bit, especially around kind of the financial operations area. For the folks that are listening in, where can they find you, Opstart, or any other details to contact you and your business?
Yeah, best way to get in touch, just go to our website. It's opstart.co. You can read it on my hat if you're watching on video, but Opstart is the name of the company. And you can find me on LinkedIn, Paul Anthony. I would be delighted to connect and continue the conversation.
All right, awesome. Well, thanks so much, Paul, for joining us, and appreciate it again.
Thank you, Richard. See ya.
All right, thanks.